Welcome back to Wall Street Podcast. It's Monday, September 15th, 2025, and today we're digging into the Wall Street Journal.
That's right.
We'll pull out the key insights on the U.S. economy, market dynamics. Our aim, as always, is to get you informed fast.
And there's some really interesting, almost conflicting signals today. Lots to unpack.
Absolutely. Let's kick things off with the U.S. stock market. It seems to be, well, running incredibly hot.
Mm-hmm.
The DJIA just crossed 46,000, S&P 500, NASDAQ Composite hitting records.
Yeah, pretty remarkable momentum.
But this is despite some, frankly, poor U.S. jobs data.
Yeah.
That revision, 911,000 fewer jobs, and tariff fears still lingering.
Right. So what's going on? It seems the market is really betting hard on two main things.
Okay.
One, the expected Fed rate cuts this week. The target seems to be landing somewhere between 4.25% and 4.5%.
Okay, Fed cut.
And two, just the sheer power of the AI boom narrative. It's still propelling things forward. The market's almost just, shrugging off that jobs report. Right.
Interesting. But not everyone's buying it wholesale.
No, definitely not. There's skepticism. Some analysts are floating the idea that these potential rate cuts might actually be the Fed signaling it sees recession clouds forming, not necessarily a sign of economic strength.
So it could be a warning sign disguised as good news for the market. Raises questions about how sustainable this rally is.
Exactly. Is it built on solid ground or just, rate cut hopes?
And we're seeing related moves in bonds and mortgages too, right?
We are. 2-year U.S. Treasuries hit a 3-year low. And mortgage rates have dipped as well.
How low?
30-year fixed is down to 6.29%. That's the lowest we've seen since sometime in 2024.
Wow.
A lot of this is tied to shifts in how mortgage-backed securities, those bundles of home loans are priced, specifically their coupon levels. It makes the market quite dynamic.
So potential window for home buyers maybe, but perhaps a volatile one.
Could be. Rates can move fast in this environment.
Okay, so Wall Street's finding reasons for optimism, or at least betting on the Fed, but Main Street, the U.S. labor market, seems to paint a different picture.
A much cooler picture, yes.
Yeah.
We're seeing more people pushed into involuntary part-time work, people who want full-time jobs but can only find part-time.
And that's reflected in the U6 rate.
Exactly. The U6 unemployment rate captures that. It's a broader measure. And look at this statistic. 1 in 4 job seekers has now been out of work for 6 months or more.
1 in 4. Wow. Up from
1 in 5 just a year ago. So it really shows increased competition, real difficulty finding suitable full-time positions.
That's a significant shift. Okay, shifting gears to trade, there's a dispute involving Whirlpool.
Yes, Whirlpool is accusing competitors, specifically from South Korea and Thailand, of evading U.S. tariffs by, basically lying about the value of their imports.
How so?
They're citing examples like gas ranges from Thailand suddenly being valued at just $175 for import purposes, like half the previous value, or washing machines from South Korea at $73.
But the prices we pay in stores haven't dropped accordingly.
Apparently not, which suggests the savings aren't being passed on. They're just avoiding tariffs. U.S. Customs is now stepping up inspections. Sounds like a serious clampdown is underway.
Right, watching that space. Now, tech, AI is always in the news, but this time it's lawsuits.
Yeah, the publisher of Rolling Stone is suing Google.
Over what specifically?
Over the AI summaries. Google calls them AI overviews that appear at the top of search results. The publisher argues these summaries illegally use their content and, crucially, reduce traffic to their actual website.
Ah, the traffic argument. And Google's defense.
Google claims these overviews actually help diversify traffic. It's a major legal battle brewing over AI, and intellectual property, really, could have huge implications for online publishing.
It's definitely a core issue for the digital age. Okay, let's dive a bit deeper into a couple of specific pressure points. First, Federal Reserve independence. There's news about a White House aide potentially joining the Fed Board of Governors, while technically on unpaid leave from the White House job.
That's the plan, yes. Said to attend FOMC meetings. And it does raise concerns, about political influence on monetary policy, especially with inflation still being somewhat sticky.
Right. The Fed's supposed to be independent to manage price stability. An appointee perceived as still tied to the White House, even on leave. Could that undermine credibility?
That's the core concern, particularly if there's pressure, real or perceived, for more aggressive rate cuts than the economic data alone might warrant. It's about maintaining that crucial autonomy.
A delicate balance indeed.
Yeah.
Okay, second deep dive point. This one feels potentially more immediate as a warning sign, the bankruptcy of Tricolor Holdings.
Yes, the subprime auto lender.
What makes this significant beyond just one company failing?
Well, Tricolor specialized in lending to car buyers with no credit history. Its collapse was unexpected by many investors. And now, the asset-backed securities, the bonds backed by these subprime loans,
Yeah.
they're trading at really deep discounts. That's a red flag. It suggests significant losses are expected.
So it's a canary in the coal mine situation.
It could be, especially when you connect it to broader trends. We're seeing auto loan delinquencies and repossessions climbing, nearing levels we saw back around the 2009 recession.
Okay, that's concerning.
It really highlights potential weaknesses under the surface. Even with markets hitting records, there are pockets of significant consumer stress, particularly in subprime debt.
Right. So bringing this all together, what are the key takeaways for our listeners, for you, in daily life?
Well, for job seekers, as we said, expect a more competitive environment. Finding full-time work might take longer, and involuntary part-time work is more prevalent.
And for consumers generally, mortgage rates, beef prices.
Mortgage rates, while lower now, could be volatile, so acting quickly might be key if you see a rate you like. And yes, beef prices are likely to stay high. Ranchers have smaller herds, demand is strong. Ground beef hit a record price in August.
Okay, good practical points. Preparation seems key in this environment.
Definitely. Stay informed, be agile.
That's all for today's deep dive. Thank you for listening.
We encourage you to share your thoughts in the comments, and we'll continue the conversation there.